Property Investing Insights, your authority on all things property investing, finance and wealth creation with Right Property Group.
Welcome to Property Investing Insights, Client Stories. And today I have Dave Zammit, who after much begging and pleading, he's decided to come in and grace us with his presence. Dave's been with us since inception, very close to. I first met him in 2012, in May 2012, and he was already an investor. He had a few properties under his belt, and we sat down, we built up a plan. And I wanted to highlight how journeys change, how visions change, and how the markets change, and therefore the thinking changes, and how you can start from just a humble beginning investor to becoming a property developer, and the journey and the lessons that it entails. So, Dave, welcome.
Yep.
And it's good to see you here and good to have you on the podcast. You're a family man, so you want to tell us what you do and where you are in life.
Sure, yeah. Well, look, good to be here. So my journey in terms of personal, I've actually got a technical background.
Mm-hmm.
I've been in technology, I have an interest in technology since back in the 80s, sort of giving away my age a bit there. You know, I want to play software development on an Apple II.
So you started when you were 9 years old, is that what you're trying to say?
Something like that, that's right, yes. And went through to Commodore Amiga. Anyway, I was basically software engineer for my whole life, and that's where my career went down that track. And eventually, as you do when you're getting older, you get pushed into management a bit more. So then from software engineer and software lead, I went on to project management. And that's where I've been focusing: project management, senior project management, and product owner in a large financial institution. And look, to me, I enjoy that work as well. I've always rated it when people ask me the question, software engineering, problem solving and whatnot, I rated it 90% satisfaction.
Yep.
Project management, probably about 75, 80% as well. So I enjoy it, but my passion's always been software engineering. So that's where I am today. I'm in the technology field as a project manager. I work in financial crimes, now cybersecurity, which is a fascinating area as well. And we can talk a lot about that, what's going on over there. But that's where I am at the moment. In terms of family, so I've got two daughters. One is going through to HSC at the moment in year 12 and one in year 9. And this is all happening while we're actually doing a owner build of our property as well, which is getting to the tail end. So yeah, that's probably the brief summary.
Fantastic,
of our,
fantastic, yeah.
Yes.
And so back in 2012, you reached out to us,
Yes.
and I think you actually referred to us by one of your colleagues, Louis, I think, from memory.
Actually, so interestingly, a number of my peers had known of you. One thing that did stand out, which was quite interesting. So I was a project manager at the time, and I had a number of team members, and I talk openly with my team members about various topics, especially if they're interested in property and whatnot, or how to get ahead. And I had a business analyst who worked for me, and we were talking about property. And I said, how are you doing in your property journey? You should sort of explore that. And he said, David, I've actually got 3 properties. And I was quite.
And you're already an investor yourself, right?
I was an investor, yeah. I mean, I had the one property from earlier on. But I thought 3 properties, and I had to sort of find out a bit more. And he was telling me about it, and he said, "Yeah, look, I went through a buyer's agency, and who I was referred to, and it's worked out well." And he told me the scenarios of those properties, and they sounded pretty good. And I thought that was definitely something I had to explore.
Yeah. And I'm still recovering from the trauma of our first meeting when you put in your big hairy goals. This is what I want to achieve and all. But we gave it a fair crack. And I think one of the things I want to flag really is that goals change along the way, right? Because that was one goal that you had, but life's taken over and the knowledge base has increased, and so goals have changed definitely over the time.
Yeah, most definitely, right? So I think the early plan was, which made sense to us, you get your core portfolio of about, say, 5 to 10 properties there, and then you get another core set of properties. They both go up in value. One will pay off the other, and you've got a clean set. And that's a good basis to start from as well. But as you mentioned, plans do change as you go along. And so whilst we did purchase a number of properties, and we still hold those properties, and they're doing very well, we're also looking at different opportunities there, building granny flats, getting the cash flow going very well, and that's actually worked out reasonably well for us as well.
Yeah. And we were talking off camera that what you're doing is very unusual, right? Because there's according to the latest stats, there's around 2.1 million property investors, out of which only 20,000 investors actually own more than 6 properties, right? And we're talking double that number in your case.
Yes.
As we went through the portfolio. So there would have been a big mindset shift along the way for you to then stick out from the cohort of owning 1 or 2 properties to multiple properties. So how did you navigate that little minefield?
Yeah, 100%. So my first property I did buy was back in the late 90s. It was a small villa out west, quite cheap. It was around the $80,000 mark. And I remember talking to the real estate agent at the time, and he was outlining his strategy. He said, David, you buy this property, the rent is $150, and you pay it down, and then you buy the next one, and then 2 rents will pay that one and free and something. I thought it was a bit sort of pie in the sky at the time, especially... I guess my background with my parents, they came from sort of hard times in like, the 40s and 50s, where the mindset was, don't go into debt. Pay down your debts and work, and that's how you have a stable sort of livelihood. So the idea of going into debt wasn't appealing to me. Having said that, then I had the other thought process of like, well, 83,000, 10-20% deposits, 16,000, 150 a week rent. It just made sense. And I thought, you know what, let me try it. What's the worst that can happen? So I bought that property, and sure enough, I've still got that property to date, and it's doing very well. I only wish I did listen to that real estate agent who did say just buy a few in that complex as well. They were selling at that price. But so that was early on in the late 90s. And then I guess the 2000s is where I sort of stabilized, got married, had kids and so on. So I ended up getting a stable job there. So we didn't sort of focus too much on other things there. But then in the early 2010s, that's when I started exploring and having discussions with peers, finding about their property journeys. And that's when I thought, you know what, maybe it's time to explore the options at least. Try that out.
And so how did that pan out? So we had the meeting initially, and then you went out, you sorted out your loans and so forth. And then we hit the ground running in terms of acquiring a few properties.
We did. So I think it was 2013 was the year of rapid growth for us. The first property we ended up buying was one in Campbelltown, which is a townhouse and a block of townhouses there. Look, generally, I do prefer to get a house with potential. But then again, the other option that you opened my eyes to as well is that, well, if we can get a number of people buying townhouses in a complex and we have control of that strata, there is potential to do something there. So even putting that aside, though, that property I ended up buying there had a reliable tenant there, no issues, and that's just grown up in value over time. A great location. Right? So I do tend to look at the location, close to transport, all those sort of things there, and that one made sense. So that was the first one that we ended up buying. Soon after that, I actually, that's right, then we were looking at, I think I spoke to you about, I do like the townhouse, but what about something that we can develop and do something with? And you came to me with another property out of Bradbury, which I think was someone that...
someone that I knew. And so the owner, which was within our circle of friends, despite lots of advice, despite me saying, yes, you can put a granny flat on it, he was hung up about a sewer line that was traversing the yard, and it was a corner block, right? So we picked that up for you, and then we problem solved the sewer line, and we've got a granny flat on that.
Correct, yeah. So we didn't build a granny flat straight away, but we did the measurements of that. It was a great price for that corner unit. We built the granny flat, and the cash flow has been fantastic. Look, I've had that recently valued, and it's way over in terms of what the price was back then. We're very happy with that property. It's always been rented. And the other good thing, which I do recall you pointed out as well, was that the area was improving. So I think there was some stigma about maybe a housing commission here and there and a few other things. But there was a whole section, which was parkland at the time, is now all been developed.
Things like brand new homes over there.
Brand new homes. And that's obviously going to impact the whole suburb over there. So That's been a great investment.
Yeah.
And we're holding on for that one.
Yeah, no, that's great. So when you look at your investors that don't have the knowledge or don't have the guidance, generally they look at an area, they look at the stigma of the area, and they make the decision based on it rather than looking at the mechanics of it. As to when we bought there, the housing commission homes around it were already knocked down, and we were waiting for the development to roll in from Landcom at the time to then have own occupiers all around you. So it's looking into what's possible in the future, but making sure that there's enough momentum there to have that realization rather than speculating to say at some point in time it'll get sold down, right? So which has then also really enhanced the value of your property there.
So I think that's a key point, right? Yeah, you're right. You got to know not only about the environment and the area, but what is the future planning, and that does take effort. And I guess that's where there's a benefit of finding a expert in the area that can actually do that research and give you that guidance as well. So for us, we went with that. We looked at the high level that it made sense. And then when we did some little investigations, and I think discussed with yourself, we did find the plans of that whole area.
Yep.
And sure enough, it came to fruition. So yeah, that was a great purchase.
So it's important not to get hung up in the finite details, but to get hung up on the concept and the progress of that concept into fruition, isn't it?
Yeah, 100%, 100%.
Yeah. So from Bradbury, where did we go?
So that was interesting, and we looked at Bellambi at that time.
Walking distance from the beach.
Walking distance from the beach. Now, interestingly, Bellambi has also got a section that has got housing commission again from one area, but that was in the block of townhouses over there.
Yep.
That's been a solid investment in terms of we bought the property. It's been more about growth and the rental. It's always been rented. It's always and it's growing in value. So that one's basically taking care of itself.
Yep.
So we're very happy with that one as well, and it's been quite stable.
And this is where we put a group of clients in there. So we cleaned out the whole block of a period of time where we now have got full control on the block, as opposed to just buying one property and being at the mercy of the thought process of all of the other owners.
Yes.
We controlled the momentum and the destiny for that block. To the point where there's been a few improvements, but no major dollars have been spent.
No, not in that area. I know there was talk about potentially doing something in the roof over there. There hasn't been that much necessarily spent over there. And I think that's another good point, is that if you can somehow get a group of like-minded individuals buying in the same complex, you have a lot more options.
Yes.
Appear, as opposed to just buying it on your own and you're at the whims of the strata and whoever's there. So that's had an advantage from that side, and there's potential there on that property as well. Down the track. And I think from there, there was actually and those properties that came through your buyers agency, Victor. I did also go out and buy on some of my own.
Because you had built up the knowledge base, right?
Well, that's exactly right, and that was really good, and I appreciate the support on that, because whilst I knew the areas reasonably well, it gave me the confidence to sort of say, these are the kind of factors that go into a decision of buying a property. And so I ended up buying a property. There was one on in Mount Druitt, Woodstock Avenue, and I just knew the price guide in my head around that. At that time, you weren't getting anything under 200,000 anymore.
We're talking units.
This is units, yeah. And I do remember on that particular one, I went to a real estate agent out at Reedy Hill. He showed me some properties there, and there was one particular property that they're wanting 220 for. And long story short, it was on a Saturday morning. He was keen on the sale and said, "Look, give me 200." We negotiated on 205. I bought it on the spot. So I saw it in the morning. I bought it in the afternoon, and that ended up being a good deal. We sold that within a couple of years for 340,000.
Yep.
And so we're very happy with that as well.
So it hadn't cost you much to hold on to this property.
No,
unlike
correct.
today's figures, where because the prices have moved up, the rents haven't quite kept up with the price movement.
Yes.
So it does cost a bit to hold, but it is still a good entry point or a good fill-up property in any portfolio.
Yes.
When you're getting units like that, where you've got very close to infrastructure, you've got a population pressure, and you've got upward rental and price pressure as well.
Yeah. Absolutely, and you're following the fundamentals of all of these things here, which kind of leads me on to an interesting property that I ended up buying, property out at Newman. So this was quite interesting. I'll keep a long story short on this one, but we were on a boat cruise in the Mediterranean, and we met some Australians on this cruise who happened to be real estate agents out of WA, and they were telling us about the property market in Port Hedland and Newman, and it's a mining boom. You're missing out if you then get to be a part of it. And they started talking about rents of $2,000 a week and $2,100 a week, and I thought, this is ridiculous. I got my phone out and did a quick search, and sure enough, there's rents being advertised for these prices. And I thought, well, what's going on? And they said, not only that, you get 5-year leases because their company's hiring it, But the prices were quite high. We're talking about $850, $900, $950 from that viewpoint. But they were very convincing. Maybe I was still on my learning curve, but we thought, you know what, that's if we get the right one, we did all the maths on it. The rent will cover a lot of that if there's any downfall in price, etc., etc. I do remember speaking with yourself, Victor, at the time, and I said, look, Victor, I'm looking at a property in this town, and I just want to get your thoughts. And you were quite adamant to look, David. It's a what do you call it, one trick pony, pony, which you frown against very much. I was a bit stubborn. I was like, well, look, just tell me, Victor, worst case scenario, am I going to just lose everything based on this? And he said, well, no, you won't lose everything, but it's a one-trick pony. And I thought, okay, that was enough I wanted to hear. I won't lose everything. Let me do it.
Yep.
Right? So you could have been a bit firmer, Victor.
No, right? My bad.
But that's fine. That's fine. Because I ended up buying it, I think it was around August. What was the date there exactly? Yeah, July 2013, I ended up buying that one. And sure enough, Victor, the first month, because it was rented by a company.
Yes.
9,100, 9,100, 9,100 coming in every month, and that's like, wow.
Yeah.
Do I retire? What do I do?
And the interest rate back then was 5.5%.
Yeah, that's right.
So that's fairly strong cash flow coming in.
Very strong cash flow, right?
There were a lot of people that bought in that mining.
They were, because those prices of houses were just going crazy. Like I said, I bought it at the 850 sort of mark. I don't mind sharing some of these figures. And so that was around June, July, and I'm keeping an eye on it, and I'm keeping an eye on the market as well. And then come January, I like to just do a review of my portfolio, just go RP data, just get a general valuations, and all of them were looking good. And then when I got to that property in Newman, one I bought for 850, it said current market price 804, and just my heart sank a bit. Now I know it's just a valuation estimate, but that was the first time that now we've just seen it go in the other direction. Otherwise, it's been steadily going up.
Yeah.
I got a bit of anxiety over that thing there, and I told my wife, I said, listen, we need to sell that. And she was like, no, it'll be fine, David, and I said, no, we got to sell it. So I started investigating real estate agents over there. They did say, look, it's sort of hard to find people that may be interested in that. And it took about a period of 3 months advertising. I think we put it at 800. I'll take the loss, right? And eventually the agent came back, and this is the mindset. Eventually, the agent came back and said, David, we've got someone who's put in an offer. And in my head, I was thinking, is the offer starting with a 6 or a 7? At the moment, I was willing to take it. This is how it was, in terms of the market's going to tank. I was maybe a bit worried. And she said, look, I don't want to share as yet until we get more information. I said, look, fine. Turned out the offer was 750.
Better than the 650.
Better than the 650. I was going to accept, because I had a whiteboard and calculated everything with the rent and everything. I'll be able to sort of at least recoup.
Yep.
And I said the 750, and I said, you know what? I told my wife, I said, I think we just got to take it. And my wife's a bit hard-headed. I'm not taking 750. We bought it 850. It's got to be at least 800.
Yep.
I said, Marie, you don't understand. we need to offload this property.
Yeah.
Anyway, I took her advice and I said, okay, let's go back with a counter offer of 785. Then they said 770. When they came back at 770, I said sold.
Yep.
I just said sold. And I was sweating, waiting for the actual thing to happen, and the sale eventually went through, and that was gone. And that, look, on the plus side, the rents were still coming in. So I did the maths on it. I actually still ended up slightly positive because the rents were $10,000 a month for that, and it sold about May that following year.
Yeah. So how long did you hold this property for?
It was just under a year.
Just under a year.
About 10 months, right? Now, Victor, I had a look at that price, and anyone can have a look at the prices in Newman at the moment. That same property is currently worth 230,000.
We dodged a bullet there.
230,000. That would have been, I'm paying off a mortgage for nothing.
And what are they renting for at the moment?
And the rent's dropped as well.
Yeah.
The rents are about 300, 400 a week.
Yep.
And look, I feel bad for the person purchasing it as well, but that's the whole thing, right? That's, you know.
Yeah.
Someone's made a mint when I bought it, because they bought it at 250, 300 and sold at 800.
Yeah.
And then I just rode the curve going down, and I had to jump ship.
Yeah.
As it turned out, the person that bought it from the agent that was telling me, they had gone to a property seminar who had some kind of thing about, yes, the mining boom is where you got to be at. And you got to be careful who you listen to.
Yeah.
You got to be careful who you listen to, right? Because there's a lot of people out there who claim experience, and you know, there's no guarantees in what they say.
True.
And she can go back and say, you told me about this. What are they going to do? There's no guarantee.
Yeah. And when you have these sort of areas, it does go through a cycle, right? So when you bought, it had gone from a low to a high, and the frenzy was there. Then it dropped. And provided there is new mining activity, it'll go through the same cycle again, right? So it can be forgiving if you have the ability to hold on to it long term and not be totally reliant on the cash flow. But generally, the idea is that you want to steer clear of this one industry area.
I can tell you that it's been 10 years where the price has stayed around the $200 mark.
There you go. There you go.
So this person who bought it at 770, they're just 10 years away.
Yeah, and they can't exit if they put all the eggs in the one basket. They can't exit.
Right? And it's interesting because the sales pitch they have on these kind of properties is that BHP has a 50-year mining guarantee, this, that, and the other.
Yeah.
Of course, they polish it. And there's a whole northwestern sort of Western Australia government policy to sort of grow the area. Everything sounds very positive. You know, and I wonder, there's got to be research you got to do to pick up on these things here. Because one of the things that happened is that BHP decided to just build their own tent city, and that's sort of like, you know, there goes your rental market.
Yep.
So things like that. And so anyway, that was a lesson learned. I think there's a few different towns like that. Certainly avoid, but it is 250 now if you're interested, Victor. But I'm not going back to.
So it's really important that, you know, even if you take that mining town element away, that you don't hang your hat on infrastructure or one infrastructure. You need to be looking at the total fundamentals and look at it from a worst case scenario that if you needed to sell in a bad market, are you going to take an absolute bath or will you be okay, right? So therefore, the investing needs to happen largely in owner-occupier areas as opposed to investor-driven areas. And Newman in WA was and is still a totally investor-driven area. So therefore, you're looking at one cohort of people where if the lending to investors is harder, it impacts pricing.
That's right.
If mining changes or building their own accommodation, then it significantly impacts the asset value and the cash flow. So you can't hang your hat on the reliance on just one source of income in an area. It has to have multiple sources of income.
Absolutely. You know.
So after that bullet that you dodged, what was the next foray?
So then I came back to you, and I think we talked about other properties, and then there was a new area that's coming of interest near Geelong, so the Norlane Corio area.
Yes.
And I pretty much I left it in your hands on that one. I didn't know anything about those areas there, and you did show me some example properties over there, and there was one that we ended up buying. In one area of Lane, which was a corner block, and had the potential to build something over there. And I remember talking with the agent because I looked at the contract and the site plans, and I did have a sewer running down the side of that, and I did question that with the agent at the time. I said, "Look, is that going to be a problem?" No, David, it'll be perfectly fine. You know, you can encase it if you need to. You won't even be building on there. That's not even an issue whatsoever, and so on. And look, you know, I said, look, that probably makes sense. It is a bit over there. I can always build a bit slightly this way, and so on. And so I went ahead with that one. Purchased that one. I ended up purchasing another property in Norlane as well. And one good thing I might just on the side. One good thing with having properties in the state, I made it a habit where I would actually fly down once a quarter, once a month. Just go fly in the morning, hire the car, drive around, look at the area, inspect the properties, get a general feel, and then fly back. A lot of value in doing that.
So you got a finger on the pulse.
You just got a finger on the pulse. Absolutely right. And so I was looking at that. another property came up in nearby there. I ended up buying that one sight unseen.
Mm-hmm.
It was a sort of a Dutch auction, they called it.
Yep.
What it was where
Online auction.
Online auction. People put your highest price gets it. I did get wind that you guys were also looking at that, Victor, and at the time, and I thought, well, hey, I didn't go through Victor. I'm just going to try it out. But anyway, I put a price in there. Probably overstretched on that one, but I ended up getting that property. I mean, if I had told my folks that I'm buying properties without even looking at it, they'd think, what on earth are you doing? I mean, I saw the pictures and so on. Anyway, so I bought that property, and that was fine tenanted, right? So I had these two properties in Nor Lane, and there came a point in time when we were looking at our portfolio, and I can't remember the exact reasons, but we wanted to sort of consolidate a bit. And so we ended up wanting to sell those two properties.
Yeah.
Right?
I think from memory, when we did our review, the interest rates were starting to track up.
Maybe it was something like that. Yeah.
There was some wind of some potential career changes at that time as well. So we decided to offload the properties because they were the most negative properties in the portfolio.
Yes. So, but as it turned out, so I ended up selling off that the one that I purchased, the Donnybrook one, which I've looked roughly. The pricing was like $250, and I sold it for $400. So it was quite nice.
Yeah. So we're talking 2 years.
At about 2 year period. Yeah. That was quite fine. Bang, sold that one. And then I went to the Cox's Road one, and I went back to the same agent, and I said, let's put that on the market and see. And I told him I got this price over here, and he said, oh, look, we'll try. But he ended up putting quite a substantially lesser price, $340, $350. And I said to the agent, what's going on? Why would we get lesser price? He goes, well, David, I mean, you've got a sewer pipe down the side there. That's actually, people don't like that. And I thought, well, hold on a second. Didn't you tell me it's not a problem before? Yes, I know, David, but the reality is when you're selling it, that was quite was quite, let me just say, disappointing when you sort of get two different sort of figures like that. But
and this is the same agent, right?
This is the same agent, the same agent, the one that told me, don't worry in the beginning, and then when I'm selling it, it's actually not a good thing. So I actually pointed that out to him. I said, I don't need that. You just tell me the facts from that viewpoint. But it just makes you aware that, look, he's just doing his job. He's trying to sell it for the best price.
And then it also highlights, right, different streets go through different cycles within the suburb as well. And yes, we've got the complication of the sewer line. Yes. But if you talk about Donnybrook, that's more owner-occupied in comparison to Cox Road, right? Yes. So therefore, the price discrepancy comes in there as well, apart from the bit where it becomes an issue when you're selling, but not when you're buying, in terms of the sewer line.
Yes, that was an interesting experience from that viewpoint. So anyway, but then we offloaded those ones. They both made a bit of profit, so that was good, and that sort of helped sort of fund other ventures over there. Other interesting properties that we looked at the time was one in Kingston Road, Kingston. But this was an interesting one where it was basically...
So we're talking in Queensland.
Queensland, we're in Queensland. And these were two... It's a whole managed complex, in fact, for overage or disabled and whatnot. They've got, in fact, a cook on site and whatnot, and they provide food and maintenance services for everyone. And so there was these two one-bedroom units side by side, and the price was like $35,000 each. Right, or 36 each from that view.
You're talking about 2016?
It was something like 2016 at the time, right? Yeah, exactly right. And but of course, having those features of the food and whatnot, the strata is quite high. So the rent was $200 a week each on those properties, so $400 a week for a $35,000 investment to two properties, $72,000. But the strata came to about $200, so you just say one unit's worth.
Yep.
Look, that took care of itself in terms of rent. That's the other thing. But growth-wise, there wasn't really any growth in that property, and
because it was not owner-occupied quality.
Not owner-occupied property, and you had all sorts of sort of issues. They had to improve the fence and security and so on. There were break-ins and a few other things. I think one of the units got on fire, and a few other things. So there was a few headaches in that complex. We decided that probably we might jump out of that one as well.
Around the time that I offloaded mine in that company.
I think it was, you were around at the same time. And we jumped out. We made an okay little profit on that, and that was clean as well. And I think at the time they had changed the management owner of who's running the property, and I thought that there was some things were changing a little bit, and so we weren't happy with those. So we jumped out of that property and cleaned up. And that's a pattern that we do. Like, we're not too 100% invested in a property that we can't sell. If we see issues with it, just let it go.
Yep.
You don't have to be too emotionally attached to.
That's right. And one thing's consistent about your journey is that you're not afraid to sell down, right? If it's done its job, you're selling down, because the whole idea is you're doing debt reduction and redeploying the capital elsewhere to target better properties, because we're buying within our means, but we're graduating up to bigger and better properties as well.
100%. We moving forward every time.
Mm-hmm.
And in fact, that was like the same principle with our principal place of residence.
Yep.
We bought it in one suburb at one price, and then sold it at a profit, and then jumped and eventually get to the suburb that we wanted to get into, where we are today. And that's worked out for us quite well.
Yeah. So after the Kingston property in Queensland, we stayed in Queensland. We bought a few more in there.
Correct, yeah.
But we then changed our approach more towards perhaps getting more towards the development side of properties.
Yeah. So that was there was a really good opportunity that came up over there in Browns Plains, which we were very happy with. It was an auction site. It was a nice large corner block. Had a house there, which was an interesting house. It was a large house, but somehow someone had gutted it into a 2-bedroom home. We had strong suspicions that it used to be a hydroponic farm in there. But anyway, whatever it may be, I think the bank at the time had taken it, and they quickly just put back to a 4-bedroom. It wasn't a whole 3-bedroom. So that was on there.
So it had local stigma. As in within the street, it had stigma.
I guess so, potentially, yeah. So, but certainly there was a lot of interest at the auction. Now, that was interesting because we were here in Sydney, and you had your employee there bidding for us at the time. He knew of our cap from that viewpoint, and he did a fantastic job in terms of how we held through the auction. We could hear in the background, we were eagerly listening in the car park over here at Blacktown at the time, and listening to the auction, and this person would bid, and your employer Mark would just the 260, 262, very calm, and so you couldn't read exactly what his limit was, which is a key strategy.
Yes,
right, Whereas the other one's like, 260 and a half, and
it comes back to the voice, comes back to the body language, comes back to what you're bidding as well, right? In our July podcast, we talked about Reshma and I talked about bidding at auction, and where we came in when bidding was at 300. We jumped our bidding by 25K, go to 325 right now. Unusual back then because we're talking 2008, 2009. Right?
Yeah, right.
But no one else bid after that. Whereas our limit was 350 on that property because it was a good development site, right?
Yes,
At auctions, you really need to keep your wits about you and not be emotionally invested in the process or emotionally attached to the property. And that way, like a project manager, it's just a process.
It's just a process, and you got to stick to that, and be completely straight. It's a skill set. It's a skill set. I don't know if I've got that skill set as yet. I got to say, but kudos to your employee there, because he knew our limit. I think it was like 282, and we got to 279, and he was again 279. Very casual about it, and going once, twice, and we got it at the 279.
Yeah. Okay.
Now that property was on a large block, and unfortunately the house was actually built sort of up front, had a garage at the back there. We were quite fortunate in that we were able to build a granny flat on that property, and prior to the rules had changed, we were allowed to build more than 60 square meters.
Correct, yeah. But the rules were on the verge of changing.
On the verge of changing.
Yeah, so we had to bring that forward.
Correct. And so we built a 110 square meter home there, and this was 120 square meter. Basically got 2 homes on the property. On a corner block. Long story short, on that one, we ended up now subdividing it. So there's officially 2 titles there, 2 independent homes, 2 different valuations. So that property's been a big win for us. Yeah.
And then from there, you got the development bug.
Look, 100%. Look, the development bug for sure is starting to appear over there. And for me, it's also my recent experience. Right? So as I said, I've been living over here in the North Ryde area, and we have a home there where I've knocked down and started rebuilding. Now, whilst we have done granny flats and whatnot, I hadn't really built a full home, so I ended up going to Homeworld, get a reputable builder there from that site, and was going through the process with them. And you'd think from Homeworld you'd get someone that is reputable and can do the job. unfortunately, they lost their license when we were at frame stage
Mm-hmm.
of the build. That left me with a home, incomplete home, and no progress.
Yep.
And I was thrown in the deep end at that point in time. I had to jump in and, go to Service New South Wales, try and get my owner builder license. They said, the property's already started. You can't get owner builder, and had to argue the case. And there's so many bits to it. Eventually, they overruled and gave me the license. But then I'm trying to find out, what's the process in building a home? There's just so many aspects to it.
Yeah. So many moving parts.
So many moving parts when it comes to considering what you need to do in order. I'm trying to find a project plan. I'm a project manager. I'm developing my own. Now, I can say I was fortunate. I was looking online, and I did find a service that actually was quite helpful. They're a service that were targeting owner builders who are new to the process, and they would actually give you guidelines on how to do it.
Yeah.
If you don't mind me mentioning.
Sure, give them a plug.
Yeah, I'll give them a plug. Build Buddy, a lifesaver for me, right? Because I was kind of stuck in terms of where to go next. I met with those people at Build Buddy, who are a subsidiary of Hudson Homes. And they saw my situation, and straight away they just helped me with, first things first, David, let's get your carpentry finished off the frame stage. And they got their tradie in there through their system, paid them there, and then they basically had a full process of what to do through that. So I was following that process. It was still teething stage early on because there was a new system there. But it just helped me know exactly where to go. And they provided sort of a building supervisor just to guide me along, but I'm still in control of that. I very much like that as a PM. And eventually got to the point where I needed that less so. It got me through all the sort of the hurdles and so on. And eventually we got to the point now that the house is pretty much built. But yeah, so very much happy with that service. But I've learned so much through that process, Victor, that I'm thinking, you know what? Maybe it's time. I've got a bit of capital allocated there as well. I'm seeing a lot of my peers now as well getting into that development side of things here, where they buy a property in a suitable area, knock it down, build a duplex, and go through that process. There's risk involved, of course, on those sort of things. And you do your calculations. You got to have a little bit of nerve. But if you do it and you do it well, that become quite a good future. And that's what I'm looking at exploring. That
and it is a natural progression, right? Because if you look at your journey, you started with a unit that you bought yourself. Then we went into different creative strategies, different types of properties. We got granny flats done. We got a subdivision done. So you've gone through, dare I say, from kindergarten to primary school, and now you're ready to get into high school and even to uni in doing the development. So I'd imagine right now in high school doing the not so involved developments, which are very safe, and potentially doing it with other partners as well. And then eventually going into bigger and better things. And we've followed journeys of other clients and other contacts of ours that they've gone through doing small stuff to doing bigger stuff, because the process remains the same. Yeah, right. It's just that the dollar signs, that the dollar figures do change. But if you've got everything down to a process, just like investing, it can just simply flow, provided you're not tinkering with it too much.
How do you mean by tinkering?
So not trying to make it too exciting, right? So you just follow the process.
Follow the process. Yeah, that's right. Yeah. Yes, 100%. Now, look, it's interesting you mentioned that, because obviously with an owner builder, I do look at, those brick lines, bricks straight and whatnot, and I'll whinge about certain things.
Yep.
Investment property, you want good quality as well, obviously.
Absolutely.
But you're not going to be sort of too hung up on the absolute detail, because you can find things. But you want good quality homes that can sell, that'll be reliable. Yeah, you're right. Just follow a process.
Yeah, absolutely. So if you were to have your journey all over again, taking away the development side of it, and just as a putting your investor hat back on, what would you do differently today, having the knowledge now? And we're sitting back in 2012. What would we do different?
Yeah, look, that's an interesting one. Look, 2012, I was quite happy with how we approached it, because we did do some rapid purchases over there. It'd be more like tweaks, to be honest. I'd probably more look at ones where I can purchase with potential for development more so, right, from that viewpoint. And in fact, not just 2010, but even earlier back in the 90s, if I had that sort of courage to do that, certainly do it back then as well, because it's hard to imagine. I don't know if I were to ask you, Victor, whether house prices will be in 10 years' time. It just seems to be going in one direction. Yep. I just don't know how that sort of works, to be honest, and how that's sustainable. But certainly for me right now, if I was talking to myself back then, I'm quite happy with what I bought because we did buy properties where you can actually do something to them. And I think I do recall that when we were talking back then, that was one of the things that I did like. So we had a mix of units, which was cash flow, and development opportunities. The only thing I'd say is keep looking and do more, because I think I stopped at about 3 or 4.
That's right.
Could have kept on going if I could. That's probably one thing I would have changed.
I guess that's where when Newman factor came in, and it did knock the confidence out of you as well.
It did for a period of time.
And then again, looking back, every investor I talk with, they all say, I wish I had gone harder in the journey. But the reality is that we want to have a balance between lifestyle, and investing, and not make it all consuming where you're investing at the cost of lifestyle, right? And you've had a decent lifestyle, I still do. And yet you've got more properties than your standard investor out there. You've gone through the journey. Now you're looking at building up from that knowledge and getting into development, which is a natural progression. Or you could have gone down the other track of, okay, let's accumulate a few more and stay with the smaller stuff of granny flats and small subdivisions. Whereas now you're looking at transferring a skill set to, after doing your principal place of residence, being forced into the building industry as such. You've realized, if you follow a set procedure and you've got a good understanding of flow, developments can be fairly easy.
Sure, yeah.
Provided you don't speculate,
Yeah, that's correct. Yeah, you follow a standard practice all the way through.
Yep.
And there will be some little deviations here and there, and that's part of a project.
Yes.
You manage issues and risks and financials, and I quite enjoy doing that. So why not make that my opportunity going forward?
Yep.
And see how that works.
Yeah. So I've got a two-pronged question for you. So if you're sitting in front of a novice investor, it's just starting out, what advice would you give them?
Yeah, look, absolutely. So I do in fact get sometimes people that work for me or peers that ask me these questions, right? Look, to be honest, the number one thing is you got to get informed. Like, you got to get knowledge. Surround yourself with people that know what they're doing, right? Go to seminars, go to things and just try and absorb and learn a lot beforehand. And get a few different views from that. So in other words, education is important, like that. And then secondly then is, meeting people that have a track record in doing these things here. So not just someone who can promise the world if they haven't done it for themselves too much, right? Let's get people that know what they're doing. I think I can't remember who made the expression, but if, you want to become a millionaire, talk to a millionaire kind of thing. So similar things like, get a good accountant. I've got a good accountant who knows property back to front, a good buyer's agent who knows property very well, and things like that. So that'd be my number one is go to seminars and build out your network early on. And going to those seminars, you will build your network. And then there's a lot of companies that, if you narrow it down, we'll give like a free sort of initial consultation. Take the opportunity on, especially if you get referred to one, and you know that some of your peers might have got some experience and they refer you to someone. Try that out.
Absolutely. And you mentioned seminars, and one of my recommendations is that if you're going to seminars, leave your credit card at home. Don't make a buying decision at the seminar. Do your due diligence the next day so that you're not caught up in the hype. Because often when you're going to seminars, you see people that are doing stuff that you wanted to do, but you don't know their financial circumstances, or they've got this person, they'll stand up in the audience and say, "Hey, I've done this, and look at me," and all that, right? Which is, and I've been around the seminar circles quite a while from when I started educating myself. It is part of the standard process of creating that hype and the buying frenzy. So make sure that you're going there for the knowledge, not to buy. Leave the buying decision for the next couple of days after the seminar, where you're making the decision as opposed to someone calling you up and making the decision for you. So now we've done investors that are about to start or haven't got runs on the board. If someone's already started investing, what advice would you have for them?
So if someone's already started investing, I mean, there's obviously different levels where they're at. It's not too different. Right? It's not too different. It's about if you're doing it on your own, you certainly want to be able to plan what your goals are and plan ahead. But again, talk to people that know. Get mentors in the subject. Get people that are experienced and leverage. Most of these people are keen to help and that, even for a small fee or whatever it may be. But again, educate yourself. Surround yourself with people, like-minded people as well. It makes a big difference, not only just from the knowledge that you learn, but the motivation, the excitement, the energy that comes out of being with people that have the same sort of goals makes a big difference. So certainly if someone's doing it on their own, congratulations, well done. You've taken the first few steps. Keep going, but get yourself into those educational seminars. And we're not talking about paying $2,000-$3,000 to join a course or whatever. You can find just simple, sometimes free, sometimes $10 or $20, whatever it is, a seminar where they talk about certain topics and just listen in, take notes and see what makes sense and network a bit as well. It really does work that way.
Yeah, it does. Yeah, the more education you have, the more options you get.
100%.
So, yeah.
Actually, interestingly, one thing you were talking about pressure to leave your checkbook at home. One thing I would suggest as a fun thing to try out, attend a timeshare, a timeshare sales event, because that, if you can withstand that sales pressure, you're doing well. Leave your checkbooks at home. They will take you for a 1.5 hour thing. They'll offer you vouchers and so on, but the immense amount of pressure that is good for you, because you need to get that resilience. There is that Victor of it's just my own and build. I'm looking at plantation shutters there. And the sales techniques they use, the usual ones, if you buy today, we can do this. I was offered a price of $30,000 to do plantation shutters. This is the one person, $30,000, right? Now I had another person quoted at $10,000, $30,000. I won't mention the group. And I said, look, no, I can't do da. And he dropped straight to $24,000. That's where the $6,000 disappeared. Just straight away it dropped $24,000. And I said, look, I'm getting other quotes that are much better over that. I can't afford that. Let me talk to my manager. And he sort of talked to the manager there. Look, we do like the area you're in. If you put a little sign at the front of your lawn, we'll do it for $14,000. So we've gone from $30,000 down to $14,000 without too much pressure from my end, like that. Kept on saying no, and I sort of offered him some sort of little sweeteners. I'll refer you to the Build Buddy thing. I'm like, in that case, let me talk to my owner again, which he wasn't talking to anymore.
Probably calling the wife.
Calling the wife. What's for dinner tonight, right? Anyway, and then he comes back to me, $11,000. And now $11,000 happened to be on par with another person. Now, again, I won't mention the name of the company. They're actually a reputable company, and so I ended up going ahead with them. And, and their installers came in, and the installers were top-notch blokes. They were doing a good job and so on. And I told them, I said, listen, you guys are doing a fantastic job, but your salesperson, it really brings the company down. David, don't even tell me about it. That it really is disappointing. I said, you need to put that feedback to there, because I came to almost say no. I just refuse to be browbeaten into pressure sales, right? But it's out there. I can imagine people would have accepted the $30,000 offer.
Absolutely,
$6,000.
Absolutely.
It's just heartbreaking.
Yeah, which is and kudos to you. You knew how to negotiate, right? And you knew how to hold your ground. Whereas if they pitch that to 5 different people, at least 3 of them will take it with the $6,000 first,
especially when they're saying it's a today only offer, etc., etc. So 3 different, just get free quotes. Simply just get free quotes, and you'd be amazed at the difference you get over there.
Absolutely, especially when he's talking bigger money.
100%.
So, whereas if you're looking at just a standard, water heater, there's not much discount.
No, that's fine. Then you just want to look at the reputation, look at Google and see what their ratings are and that sort of stuff like that.
Yeah, fantastic. David, it's been a pleasure having you on the podcast. We've learned about what not to do in terms of speculating, and if it's too good to be true, it usually is, with the Newman example. But we've also learned about resilience and taking a formative approach towards investing, and not being afraid to sell down when it makes sense, and then building up from there and getting into new ventures and honing your skill set in line with what you normally do in your day job, to then use that to build your home when the builder's gone bust, and then from there taking those learnings and looking at now doing developments, which is a natural progression right from kindergarten all the way to high school. I hope to see you at the university. And when at university, make sure you call me at your graduation.
I'm looking forward to it. Thank you very much. It's been a pleasure.
Yeah. That's Property Investing Insights. Until next month, goodbye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.